Thank you for that, and great to be here. And I'm sure Tom loved the bigger brother comment there. So I'll keep with Tom's theme here and stick to a speed dating type time frame and see how we go. So I wanted to start by providing a little bit of global context. I'm going to start global. I'll move in and provide a little bit of context around our Australia business, of course. And I'll also hopefully provide a little bit of insight around what we're seeing in the market at the moment. But starting global, Nutrien operates in three primary geographies around the world, three primary agricultural hubs. So North America, of course, the United States, Canada, we've got a really good footprint there. South America as well, increasingly focused on Brazil now as we look to continue to invest in that really exciting geography. And Australia. And Australia is a really important geography for Nutrien. It's been a part of the world that has attracted significant investment from Nutrien, and will continue to. We really like the market, and I'll get into some of the features that we particularly like in a moment. Nutrien is the largest provider in the world of crop nutrients. We provide fertilisers to over 60 countries around the world. So that gives us scale, that gives us a really good footprint, that gives us an opportunity to create value in the markets in which we operate. And we look to create that value by creating, where we can, structural advantage in these markets for the benefit of those markets and for the benefit of the customers that we serve. And we look to bring opportunities for vertical integration where it makes sense, where we can bring efficiency to markets. So a few good reasons and a few good examples of that we think about a lot. So fertiliser, starting with that, we're end-to-end in fertiliser, we're basic in fertiliser. We extract, we produce, we distribute, and so we've got a real opportunity to leverage our really strong cost position and bring those competitively priced, valuable products to market in a really efficient way. So that's something that we really focus on, and really an area where we think we can bring value. Another area is around global supply chains. So we've seen how disrupted global supply chains can be. We've seen examples, really prominent examples recently, where global supply chains are not functioning properly. So to the extent that we can invest in those global supply chains, the infrastructure that sits around that, provide surety of supply, reliability of supply into the markets in which we operate, we think that's a really valuable thing. And then there's also bringing products and solutions to market. So with our scale, with our leverage, if we're able to get hold of the best solutions available, the best services available, and bring them to the markets that we operate in, we feel that that adds out value as well. So there's some of the key things that we focus on. I'll put some numbers around it. I'm not going to get too much into the numbers, but in terms of retail, in terms of our footprint, a little over 2,000 retail locations now globally and growing. I've got a reference point up there of 2019. We've grown about 11% in our footprint through the course of the years following that. And we're going to continue to look for targeted opportunities to expand that footprint. Earnings, and I'll touch on that quickly. We updated the North American capital markets with our earnings result a couple of weeks ago. Really good update. We updated our guidance as well for the full year. Really pleased to be able to say that we maintained our earnings guidance. So 1.65 to 1.85 billion US dollars is the EBITDA guidance that we had out in the market. We maintained that. We commented on the cycle. So we commented around the fact that we think mid-cycle for our business is a little over 2 billion US dollars. So we took some comfort from that. And I think the fact that we're trading somewhere near the mid-cycle, I think, suggests that we're starting to return to somewhat of a period of trading normality, some sort of stabilisation in the market. So I think that can only be a really good thing for global markets, and I'll get to Australia in a moment. The other piece of financial information that we often talk about in the market, which I'll quickly reference here, is proprietary products. So we generated a little over $1 billion in proprietary gross profit in 2023. It'll be something similar in 2024. So this is where we're able to bring valuable products to market that we think can make a difference in the lives of our customers. And we've got a really good set of products out there at the moment. We've got a really good pipeline of products. And if you look the middle bar there, crop nutrients, that's probably the segment that we're most excited about. So these are products like specialty fertilizers and nutritionals. These have got a really good value proposition in the market around yield, and we know that and we sell on that basis. But one of the really exciting themes is there is a value proposition emerging on this product range on a sustainability front. So bringing these to market, we think, can really add value, and I'm going to get into sustainability a little bit in a moment. So a little bit on strategy and how we think about retail strategy specifically. I think if you stand back and look at the value chain, we really look at it through a lens of, if you are not adding value in that value chain, you are only adding cost. So we really look through that lens. When you do look through that lens, it starts to become really obvious the role that you can and should be playing in the value chain. And so we're very disciplined at thinking about it in that way. Some of the key strategic areas that we think about, so obviously business model optimization. We want to have the right asset infrastructure in the right places to be able to serve our customers and to be able to serve the markets in which we operate. Growth opportunities, so core markets, growth markets, and they are those geographies I described. So North America, Brazil, Australia, we truly do think of them as growth markets in an agricultural sense, so we'll continue to invest, and I'll give some examples around where we're investing in a moment. Proprietary products, I talked about that. There is great opportunity for us to bring some of our IP to the market and bring some of our pipeline to create value. Digital innovation, so I'll talk about this in a moment as well, but we do see value in looking for opportunities to digitise aspects of the customer experience, and we're starting to invest in that space and starting to get some really encouraging results. And then finally, sustainability. And I'll speak a little bit about what we're doing in sustainability in a moment, but that is a key pillar of our strategy. It's a key area where we think we can help customers, and it's a key area where we think we can play a role in being part of the solution in the market. So switching gear to our Australian business, and just to provide a little bit of context here, and just to repeat, the Australian business is an incredibly important part of Nutrien's global business. We see it as a really, really attractive place to deploy capital. We've got a good track record of doing that. We will continue to do that. 4,000 employees, 700 retail locations, a little over 300 independent members that work with us out in the market. It's good scale. It's a really good presence. It gives us a real opportunity to have an impact in the market, to create and add value into the Australian market. So if we think about investing into the Australian market, so I've referenced that a few times, and this is something that we think very carefully about. And if you think about the fact that if there are opportunities, if there are value pools emerging, if there's an opportunity to create value in the market, you're going to push capital in that direction. And if there's an opportunity to create structural advantage through the value you're creating, you're going to run like hell. You're going to put capital into that really quickly. And the reason I say that is the Australian market is a really interesting place. It's competitive, it's really well serviced, it's dynamic, it's defined by innovation and resilience. These are really precious things. We look at the Australian market and say there is still really, really good opportunity to get fair return for the investment, for the capital that you put in. You can get a fair return in the Australian market, in the Australian agriculture market, for the risk you take, for the innovation you bring. And so we look at it through that lens and we feel really good about it. But we also really like the fact that it's a dynamic, competitive, well-serviced market. And we need to preserve that, we need to nurture that, and we feel really strongly about that in the Australian marketplace. So where are we investing? So a little over $100 million going in this year. That's a pretty similar profile to recent years. There's a number of areas, product portfolio and solutions, a big area that we're investing in, whether that means our proprietary business, whether that means working with our partners out in the market to bring the best solutions to the hands of our customers. That's something we're really focused on. And doing it efficiently. So one of the key areas that we are really investing in at the moment is local supply chain infrastructure, having a really resilient, robust supply chain in Australia that can give us some comfort around some of the shocks that we see in the market. I referenced some of the supply chain shocks and volatility that we've all experienced in recent years. So the more we can invest to shore up our local supply chain, the better off our industry is going to be. Transformative digital tools, so I referenced that before, and I've got a slide coming up where I'll give you some examples of it, but it's a key part of our investment, it's a key pillar, and it's an area we'll continue to look for targeted opportunities to invest in. Sustainability outcomes as well, and I use the word outcomes because that's, I think, the phase that we and many in the market are starting to move towards, is what sort of outcomes can we generate to improve sustainability scenarios for our customers and for the marketplace, and what kind of solutions are there? What kind of solutions? So whether it be nitrogen management, methane management, farm practices, and so on, what can we do? What can we bring? And what is the data telling us? So I'll explore that a little bit with you in a moment. And then footprint, of course, looking for opportunities to grow our footprint, whether that is bricks and mortar retail stores, if we can grow that, whether that is looking for gaps in the market around playing an intermediary role and moving into some of those agency spaces. We think there are many attractive spots in the Australian agriculture market, and we'll continue to look for those and exploit those. Just sharing a little bit of insight. So one of the things that I thought might be interesting to share was just around fertiliser application rates. So from an NPK perspective, really interesting trend here, and something that we started to look at around the last couple of seasons. And what we've seen is fertiliser application rates have been on a steady and very stable and predictable ramp up over a great many years. And then around 2021 started to change, started to drop back a little bit. And we found that interesting. And when we explored what was going on in that space, some fairly intuitive sort of reasons started to pop out. So obviously some of that supply chain dislocation that I've talked about, that certainly occurred over some of these years. So it was really apparent that many users of fertiliser products in different geographies around the world, including Australia at times, were not able to get the right products at the right time for the purposes that they needed. So that certainly had an impact. And then somewhat correlated to that, price. So we've seen what's happened with fertiliser prices over this period, since 2021 in particular. A real peak, it's come back to a more stable level now, but that certainly impacted fertiliser application rates. And so there is a direct correlation in the data with global crop yields. We found that interesting. We think that will stabilise. We're starting to see that now. 2024 already, we can see that application rates are normalising. And so I think it really is interesting to see the sensitivities in the market to some of those factors. The other market I wanted to quickly comment on was China. So we often think about China, we often think about China actually through the lens of crop protection products. So we know that 70, if not closer to 80% of all crop protection products are sourced from China, whether that's tech material or intermediate products that come from that geography. We have a real dependency there. That dependency means we're exposed price-wise, we're exposed supply reliability-wise. So that is a dependency, and it's not going to be easy to change anything very quickly in that space, but it's something that is very real, and we talk about it often. But the thing that I'm highlighting here actually is on the fertiliser side as well. So on the chart I've got phosphate and urea exports from the China market over the past several years, and you can see a real step change, a real restriction that came into place from 2022. And so what happened here is supply chain dislocation, which I've mentioned a few times, prompted the Chinese to start to restrict or cap exports and really prioritise supply for their own local markets. That caused some disruption in the market. The global supply chain markets are generally pretty fluid, and they're able to rebalance in a reasonable time frame, but that doesn't help markets when they need product at certain times. So certainly we saw some disruption there, and we found this really interesting, and the way that these geopolitical and macroeconomic events are going to continue to shape the way that supply chains rebalance themselves, we think is going to be really interesting, and we do feel like we can play a role in influencing that a little bit. Okay, so coming back to Australia, I wanted to touch a little bit on what we're doing in digital and just provide some examples or provide a little bit of context here. So as I said earlier, if there are opportunities where we can digitise aspects of the customer experience that creates value for our customers, that creates value in the marketplace, we're going to look to invest into those spaces. And so a few examples. Convenience. Convenience is one, so very simple example. We went live with our digital hub recently. We've got now over 10,000 customers using that hub. They've got a range of account management functionality that they can engage with us on. They can do that digitally, they can do it online. It's fairly basic, but it was a relatively new concept in our marketplace, certainly for our customers. So we're really happy with what we've been able to bring there, and certainly we've had great uptake. Flexibility is another one, and a little example here. We went live last year with a digital financing product. So a product that provides cash flow and liquidity and really that flexibility to our customers to access the funds they need when they need them so they can capture opportunities in the market. So we're really pleased with that product. It's had a terrific uptake and customers can engage with that product in a completely digital fashion, which has been really great. And then insights. If we can bring insight to market, if we can bring content to our customers that adds value to their lives, we're going to look for opportunities to do that. And one of the recent examples around that has been our Livestock Insights app. So we've brought that to market, provides a live feed of the various channels of livestock sales, provides pricing, provides volume information, and starts to address the arbitrage that can exist in the market in different geographies in Australia around sales volumes and prices, etc. So really pleased with this product, and again, having some terrific uptake with it. Sustainability, so excited to get to this slide. I wanted to quickly just touch on this, so what we're doing and the way we're thinking about it. So first of all, we've got this macro challenge. We need to become more productive in the way that we produce food globally, but we need to be doing it in an increasingly sustainable way. So that presents itself with a real challenge. And when we start to look at the role we can play in the marketplace to address this, I guess we start with baselining, and this is really something that we've been working very hard with our customers on over the past several years, which is just a very simple concept of baselining footprint, baselining carbon footprint, and helping them to compute that, calculate that, store that, and have a real starting point around where emissions start from and what we're going to do about it. Then we quickly pivot to the solution stage, and this is the really exciting piece. We've done 175 odd trials in the last year, projects with customers. We've serviced over 300,000 hectares of crop in land where we've trialled some of the many solutions that we already have at our fingertips. Again, whether that's nitrogen management, whether that's methane management, whether that's farm practices, etc. Bring in some of the solutions that are already available to start to measure the impact that we can make. And really encouraging signs, and there's a terrific pipeline of solutions coming to market as well that we think will add further value to this. And then there's collaborations, and this is something we feel really strongly about. I think we realise in a very obvious way that we are not going to be able to solve the challenges in sustainability on our own. There's a value pool that is being created here, and I think the industry's got every right to go after it, and we can bring value in this space. So a good example of a collaboration, low carbon canola project that is yielding really fantastic results, partnered with the likes of Viterra and Cargill. Really excited about doing that, and these collaborations and partnerships with many of you in the room and many others in the industry are going to be a really important method of deriving value in this space. People, I wanted to mention people. This is just critical for agriculture. I think we need to have a community, we need to have an industry that is attracting the best and brightest talent to our marketplace. And so we're very focused on that. We're very focused on investing in this space, whether that be our diversity and inclusion programs. We want to have the most inclusive industry possible. We want to have the most inclusive company possible, and we want to be able to attract people in that context. We want to play a role at a grassroots level. We want to continue to invest in what has traditionally been a very successful graduate recruitment program. So engaging at the university levels and bringing the best and brightest young people into our industry, bringing their thoughts, their visions, their aspirations and their energy, really, first and foremost, into our industry, into our business to make a difference. So we continue to invest in that. Career pathways, we work in a fantastic industry that provides a variety of pathways to a very dynamic industry. So giving our people and giving people those career experiences is very important, adds a lot of value. We're also fortunate enough to operate in a global business, so providing those global pathways has proved very successful as well. And then, of course, training programs, and Nutrien College, a good example of that. We invest heavily into that, and we think it provides employees with a terrific experience. So we stand back and look at this from an Australia perspective, from an agriculture perspective. This really is an important challenge, and it's a challenge that we take very seriously, and I know many others in the room do, and that is simply attracting the best and brightest skills, competencies, getting the right labour force into the Australian market, into Australian agriculture. It is a very, very big challenge, and it needs to be addressed in collaboration across the industry. And this is my last slide, so just wanted to mention very briefly investing in communities as well. So we're very privileged to work in many of the rural communities that we serve, and we take very seriously, and we take great pride in being able to put back into some of those communities. So some small examples of what we're doing. A really good example, the emergency trauma training in collaboration with CareFlight. I've done that training myself, just fantastic experience, fantastic skills that you take and carry around from that date forward. We've had over 500 people through that program now, employees, customers, community members, just a fantastic program. So we'll continue to push funding into that. Community grants, so providing meaningful grants to some of the rural communities that we operate in that make a meaningful difference. TSX and investing in some of the mental health services that are so critical in our industry. And then a new one for us, primary schools program in many rural communities as well, which we're going to promote through our CRT business. So hopefully that provides a little bit of context. I've raced through in speed dating fashion there and hopefully stuck to time, but wanted to provide that context, global, local, and hopefully shared a little bit of insight around what we're seeing. So thank you, everyone.
Thank you, Adrian. Do we have any questions from the crowd? All right, we'll jump to the next presentation.